What is this concept of a dual dated audit report? Well, I didn't know what this was when I was studying for the exam, but I'm going to teach it to you and we're going to make sure we get through it. The independent auditor has two methods for dating the report when a subsequent event disclosed in the financial statements occurs after the auditor has obtained sufficient appropriate evidence and before the issuance of the related financial statements. Let's just revisit that again. So we have two methods. We have two ways of writing our report, and here's kind of some language, some wording we'll talk about. Two ways for, because your report's going to say, oh, this report's as of, let's say, 3/15, meaning if something happened 3/16, it's not included in that report. So don't expect it to be. So there are two methods to date the report. When a subsequent event disclosed in the statements occurs after you've essentially done your work, right? This means when you've done your work, obtained sufficient appropriate evidence, this means the audit is good to go. You can issue an opinion. Remember, you can only issue an opinion once you've obtained sufficient appropriate evidence and before the issuance of the actual statements. What's going on here? The auditor may use dual dating. So, for example, we're saying, okay, we're dating it February 16th, 20, whatever, except for notes to the financial statement, maybe note number 4, as to which the date is March 1st of that year. So let's just say, squeeze that in there, 2025. As I'm recording this, it's not 2025 yet, but doing a little, say we're in the future. Oh, that's god awful 25. This will also be 25. Here we're saying, okay, everything's good to go. We're covering all this except for note to the financial statement number 4, as to which the date is March 1st. Or you could just date the report as of a later date. So two options. We could say, hey, 99% of this audit, 99% of everything was covered here, except for this one note, and the one note is dated March 1st. Or we could just say it's March 1st. Now, why would you choose one or the other? I mean, in essence, it does sound easier just to say March 1st. But in the former instance, the responsibility for events occurring subsequent to the original date is limited to that one event. So what we're saying here is, okay, 99% of our responsibility is covered as of this date, but then that 1% of responsibility goes up to this date. If we just say everything goes all the way to March 1st, well then if something else happened that we didn't catch, then we are taking responsibility for something we didn't investigate. So again, the purpose here is saying, all right, our responsibility ended February 16th, except for this one instance, which we did cover, and we took responsibility for that on March 1st. So if you take responsibility for everything as of March 1st, so let's say this note is, it's a lawsuit, right? So you're just, okay, this lawsuit we're taking responsibility for. If you say that as an auditor, you're taking responsibility for everything as of March 1st, anything between February 16th and March 1st, if something you didn't catch there, well, then you got a problem and you took responsibility for something you didn't investigate. All right, limited to that, blah, blah, blah. In the latter instance, the independent auditor's responsibility for subsequent events extends to the later report date, and accordingly, subsequent events procedures should be extended to that date, meaning if you do this, you need to do more work. If the auditor chooses not to dual date and chooses the latter date, the auditor is taking responsibility for all subsequent events that occurred through the latter date. Very important. Professional liability, hot topic. You don't want to come under the gun. So more on our dual dated audit report. When an auditor issues an audit report that was dual dated for a subsequent event that occurs after the original date of the auditor's report, however, before the issuance of the related financial statements, the auditor's responsibility for events occurring subsequent to the original report date is limited to the specific event reference. This is something we saw before, just drilling it in, not letting a single thing fall through the cracks here. It's all about what you're taking responsibility for. It's all about your professional responsibility. Let's go through an example. Your examples are wonderful. All right, so Newman Boss, a CPA firm, obtained sufficient appropriate audit evidence, meaning, we talked about this before, but this is essentially saying your audit can be complete now. An audit is only complete once you've obtained sufficient appropriate audit evidence. So they did that on March 3rd, year 5, to render an opinion on Buck and Dare Co's 12/31 year 4 financial statement, covering a normal fiscal year, year 4, and on March 3rd of the next year, we essentially did all of our work for the audit. Now we have a subsequent event, that occurred on April 5th, which is after this date, which required an adjustment to the financial statements. So the CPA firm decided not to dual date the report, and they completed extended audit procedures for subsequent events on April 29th, year 5. If the adjustment is made without disclosure of the event, the firm's report should be dated April 29, year 5. So we're just extending those audit procedures, doing more work. What would be some real instances of why you choose one versus the other? I'd say it's probably going to be budgetary related. If you don't have the budget to keep paying people to keep auditing to this new date, then you probably won't do that. You'll just dual date the report. Adjustments or disclosures made after the original report date require the auditor to dual date, which is option 1, or extend the date of the auditor's report, which is option 2. Since Newman Bossa decided not to dual date the report, it should be dated April 29th, year 5. This is the new date that sufficient appropriate evidence was obtained, meaning, we had to do work to assess year March 3 all the way to April 29th. So that's a lot more work, right? So a lot more time for your burned out auditors to want to work. The new date includes procedures related to subsequent events. So you're covered there. But hey, if money's no object, why not? Go for it.
Hey there! Are you ready to not only pass your CPA exams, but truly understand and enjoy the material while studying? I know it seems impossible, right? Especially to enjoy the material? We'll do it together. Tap into the power of CPA.examprep.ai, where we've got personalized quizzes, multiple choice questions, memorization guides, flashcards, simulations, all tailored to your learning. Our adaptive study planning puts you on the fastest path to success and lifts you back up if you fall behind. Avoid wasting your precious time and money attempting an exam with a low chance of passing, because who wants that? We want to get you through this process as quick as possible. Our exam readiness prediction lets you walk in with confidence, knowing that you're prepared for success on exam day. Thankfully, there's no payment method needed to get started, so why don't you come join us? Visit cpa.examprep.ai and let's achieve your exam success together.